The Federal Reserve's policymaking arm convenes Tuesday for a two-day meeting to determine the next steps for the central bank, including further scaling down of its economic stimulus program and hints of when it may raise the benchmark interest rate. Alfonso Esparza, senior currency strategist at OANDA, is here with me to tell you what to expect from the Fed and two other key macroeconomic events that will sway your investments. Alfonso, thanks so much for being here.
Thank you. Thanks, Joe, for having me.
So, Alfonso, what are the three things you're looking at for Wednesday?
So this week is actually very important in terms of what's going to happen at a macro level. So we have 3 out of 4 of the biggest events going on right now. So we have the Federal Reserve with their tapering program. We have the European Central Bank just basically on the fence. We also have the Bank of Japan also sort of expected to deliver on its 1-year sort of a hiatus from monetary policy. And then we have China with this, the manufacturing numbers that probably will confirm a slowdown.
So let's look at the Fed first, which of course everyone here, investors, know. We're probably expecting another about $10 billion pullback in economic stimulus, but the Fed funds rate will stay the same. How should investors prepare for tomorrow?
So what's been happening for the past of the 2 monetary, or actually the 4 monetary meetings has been a tapering of 10 billion. So we will expect that to continue. The minutes will show that there was no dissent. Basically, that confirms that the trend will continue. What was surprising on the first Janet Yellen speech was the fact that the statement said nothing, was very clear, 10 billion, very by the book, but she went off script and basically said that the potential for 6 months after the end of taper. So if the taper will continue as it is expected, it will end in the fall of this year, and we can expect higher U.S. rates in spring 2015.
Right. Now, we've also got Bank of Japan that will come out with a policy statement. Economists aren't expecting them to bring out anything new this week, at least.
Yes, that is correct. They were pretty much the boldest central bank in 2013, but this year they've been basically out of it. So they doubled their monetary policy. They brought the yen upwards of 100 again. Yeah. So they are very bullish on the 2% inflation goal. But then that kind of suddenly stopped. So right now they're on a wait-and-see approach, but they're going to be almost forced into action just because of the introduction of the sales tax in April. And Japan had an incredible Q1 just because of that. So people rushed in and bought big-ticket items before the sales tax. Now the Bank of Japan doesn't have that anymore, so they'll have to do something to keep the ball rolling.
Well, and finally, Chinese manufacturing data has been relatively weak. Are you expecting more of the same?
Pretty much. Actually, even the Chinese president went on the national television and said, expect more of the same. So expect slow growth. It's time to get used to the new normal. So even they're preparing their people to consider that this will continue and there's no magic bullet or there won't be massaging of the numbers. So we can expect Chinese manufacturing to slow down and have an effect in sort of the emerging markets and also the major markets that depend on China for most of its products.
All right, Alfonso, as always, thanks for your take.
Yeah, thank you.
Thanks again to my guest, Alfonso Esparza of OANDA. For TheStreet in New York, I'm Joe Deaux.